Evening, everybody, and thank you for taking time out of your day, or should I say night, to hear about this opportunity. It's really something that I'm personally very passionate about. It's actually very rare that the that life's health issues and financial issues overlap, and I think that this is really where the two, when understood very, very well, can really help one another because when there's someone who needs medical treatment and they short on finances and there's an opportunity to get finances to get the right treatment and to get the right help that one needs, it really is so important to completely unpack that and see what there is available. Tonight we're going to discover a lot of hidden treasures. This webinar is not only going to be applicable for the upcoming 2026 tax return, opening around July, but you're gonna find out that it also it can have a massive impact on your previous years, and I'm gonna explain tonight what can be claimed, who qualifies, how we can help. As I go through the webinar, if you have questions that come to mind, please do drop them in the Q&A, and we'll do our best at the end to answer all the questions. Before we start, just a bit about Stratfin. I'm Dorvi Blumenau, Managing Director at Stratfin. I'm going to be taking you through the presentation tonight. Ilan Rabinowitz is the brilliant mind behind Stratfin, the founder, uh, CEO, and will be doing the Q&A. And there's really a couple of brilliant solutions that we've carved out at Stratfin when it comes to taxes for businesses, for companies in payroll, as well as in the individual taxes. And the most effective solution that we've seen is definitely the medical tax back solution, and we're really excited to share it with you guys tonight. So just a little bit about medical rebates, and I'm going to go into the theory of it. If you do lose me in the theory, really don't stress. The take homes are very, very clear. And I'm also going to go explain how medical rebates work before a medical condition and what happens post a medical condition so that you really can get a full understanding of it. And even before how medical conditions can increase your medical rebate, there's other opportunities that can also be worked on to increase the medical rebate, which I'm going to discuss as well. And then we're going to go into what qualifying medical conditions can increase the rebate and how do they increase the rebate, and lastly they're going to go on to action points of how do we then convert that into real financial value. So the way South African tax system is set up is that any taxpayer in South Africa that pays for medical aid or has medical expenses, they can get back part of those medical rebates. If you have a medical aid, SARS will allow you to get on average around 300 Rand per member that's on the medical aid per month. So that, let's say there's 4 members in the family, irrespective of how much your medical aid is, you'll get back 1,200 Rand per month in your medical Section 6A rebate. And that's irrespective of medical conditions, irrespective of how much your medical aid is. If you're a taxpayer, you should be getting that. Many of you may not even be aware that you're getting it and already getting it. Your medical aids would advise SARS on exactly how many family members there are through the medical aid tax certificates, and then SARS do that calculation and they give you a portion of that back. Then another thing happens. SARS then work out through the medical aid tax certificate. They then look at out-of-pocket medical expenses as well as how much the medical aid did cost, and they give you a percentage back. That percentage isn't so big. Maybe it'll be 5%, 10%. It really does depend on how much the taxpayer is earning, how big the medical expenses were, both for the medical aid contribution and the out-of-pocket expenses. But that will increase your medical rebate by an extra couple $1,000. So let's just make this a little bit more practical. If we have a family Say the dad's earning 50,000 Rand a month and is the main member of the medical aid. 600,000 Rand in total is his total income for the year. He then pays a 5,000 Rand a month medical aid. That's at 60,000 Rand for the year, and maybe out of pocket expenses, another 3,000 Rand out of pocket expenses, taking him to a grand total of 96,000 Rand for the year. That taxpayer, that dad will get back when he does his tax return, he'll get back he'll get back roughly maybe 18,000 Rand of that spend, which is quite nice, but it can get a lot nicer. So that's how medical rebates work before medical conditions. Already over here, I see that a lot of people are missing out on opportunities, and I'm going to give a few take homes just on this point before we discuss how medical conditions can significantly increase that amount. Number one is that if you are paying for someone else's medical aid and that even though you're not the main member, but let's say you're paying for a parent's medical aid or a sibling's medical aid, those those expenses can go towards your out-of-pocket medical expenses, and SARS will then give you a percentage of that back. And if you are paying for someone else's medical aid and they're not on your plan, it is so important that uh, you do submit that to SARS when you do your tax return, and you can get back a percentage of that spend as well. Number two is as follows. Oftentimes we have medical expenses and we know the medical aid is not covering, and therefore we don't even submit it to medical aid. Say the same family was sending their child for therapy, and it's 1,000 Rand a month to the psychologist, but the medical aid never covers. So the parents would think, okay, what's the point of submitting it to medical aid? And here's a very, very important take home already here is always submit everything to your medical aid, because if you do so, even though it's then rejected as a claim, but at least it will be on your medical aid tax certificate. And when you're doing your tax return, instead of trying to find all those costs that you spent out of pocket and try to prove that to SARS with bank statements and calculations, it's already on your medical aid tax certificate, and SARS will then do the calculation for you. And essentially, the medical aids are serving as your personal logbook on all your medical spend. So that's a second very, very important take home already over here. Okay, now here's where the real magic happens. When there's one person in the family that is struggling with a medical condition in one of six categories. Category number one is intellectual. Here you have neurodiversity, learning difficulty, remedial learning, um, really any barrier on an intellectual level to daily functioning. Vision, if one is compromised in their vision, for example, they can't drive, they can only see through one of their eyes. Communication, here you have all your non-verbals, children which are struggling with word retrieval, or even someone with a moderate to severe lisp that's now not able to fully communicate themselves. They're shying away from social events, from talking up at meetings. In the physical category, you can have sleep apnea, you can have cancer, severe rheumatoid arthritis, any mobility issue, and the list continues. In the mental health, that's where you have depression, anxiety, ADHD, and anything else which falls into that category. And lastly, hearing, that's self-explanatory, hearing loss. If there is one person in the family that is navigating a medical condition in one of these categories in a moderate to severe level, moderate as opposed to mild, but also moderate, it doesn't need to be that severe. If it's moderately affecting a person in their day-to-day life, they will now qualify that the family, the taxpayer, for additional medical rebates, which we're going to discuss shortly. But what's the important point to realize at this point is that there are six categories, and what SARS are looking for, they're not looking for a diagnosis as such. They're looking for how a person is affected in their day-to-day life. Even if someone has a diagnosis and is not being affected in their day-to-day life, that will not qualify the person. And vice versa, if someone doesn't have a diagnosis but is clearly affected in their day-to-day life in one of these areas, that would qualify them. SARS are looking for how is a person affected moderately to severely in their day-to-day life, whether socially or at work or at school or just in their general lifestyle, if they can't walk long distances and things like that. So what happens now is as follows. Say that same family that same family which we discussed, for example, I'll actually change up the numbers a little bit. Let's say that family was paying 10,000 Rand a month in their medical aid, another 2,000 Rand a month in the out-of-pocket expenses, taking them to a total of 144,000 Rand. If they were to go about their tax return on the medical section without applying to SARS for additional medical rebates, their family would get roughly about 20,000 Rand back in their tax return. If they apply for additional medical rebates, what SARS called disability rebate, and the word disability used by SARS is used very loosely because the examples they give is not what we commonly understand to be disabled. For them, if someone's impaired or disabled are the two words that you would find. What will happen is as follows. That same taxpayer can now get back 33% of their full spend. So going from 20,000 Rand to 33% of 144,000, that's roughly 48,000 Rand, a 28,000 Rand increase. And that 28,000 Rand increase can really make a very significant difference when uh, when when looking for the right help and the right assistance navigating these medical conditions. Another piece of magic is as follows, that even though school fees is commonly not viewed as a medical spend, if one's child, because of neurodiversity or for whatever other reason, is in a specialized school that's now costing the parents more than what a government school in the area would cost, the difference in that cost is now viewed as a medical expense. So let's say there's a family that is now sending their child to a specialized school because of the medical condition, and now the school fees are 10,000 Rand. Commonly, school fees are about 1,000 Rand. A government schools are about 1,000 Rand per month. The difference between 10,000 and 1,000 is 9,000 times 12 if it's a 12 month school fee structure. And that would come to another roughly 110,000 Rand, and one would be able to claim back 33%, which is roughly another 35,000 Rand. So this same taxpayer, which was previously only getting 20,000 Rand, we've now managed to increase his rebate from 20,000 Rand to 80,000 Rand. To recap that, it's 33% of the full family's medical spend that shows on the medical aid tax certificate. So the full family's medical aid contribution plus all the out-of-pocket expenses that is on the medical aid tax certificate, and then additional 30,000 Rand for the school fees. And school fees is just one example. If there's a rehab that one is paying for, or any other facility that's there catering for a person's medical condition, that would also be a qualifying medical spend and can significantly increase your rebate. More examples within this is caretakers or facilitators, scribes, remedial assistants, out of school remedial assistants. Any expense that's linked to a medical condition can now qualify for additional medical rebates, and one can get 33% of that back. Really is very, very significant. Another user case that we've seen works is travel. Whilst travel is not a medical expense, but if it's travel for a medical reason. So for example, we recently had a client that was traveling from Pretoria to Rosebank twice a week for their child's cochlear implant, and that was going on for about 6 months. We were able to claim back 33% of all that travel. And similarly, if the travel to the school is more than 10 kilometers, that's the travel which SARS will acknowledge as a medical uh, travel, and one could get back 33% of those travel costs. How to go about claiming these rebates? So, once again, building up on our case, first we clarify that every person already gets a medical rebate, and make sure to submit everything to your medical aid so that SARS will then have that medical aid tax certificate and and submit that directly to SARS for you. Building on that, we said, okay, is there someone in the family with a medical condition? If there is someone in the family with a medical condition, we're now able to get back 33% of all those medical spend, which is in your medical aid tax certificate, as well as other expenses, which even though commonly aren't viewed as a medical spend, but if they're related to the medical condition that the person is navigating, that can also be viewed as a medical spend, and one can claim on that as well. How to access this? When doing your tax return, SARS are looking for a form signed off by the doctor stating that this member, whether it's mom, dad, or one of the children, is navigating a medical condition affecting them in their day-to-day life. That form is called an RTRDD form, and it needs to be completed by a doctor and then submitted in the tax return. We've seen the challenges that have come up for clients when trying to submit, or should I say, for fellow South Africans, and therefore we put together an entire team of there's about 10 of us on the team dedicated to helping getting these claims over the line. And right from the start, what we do is we assign a client manager to assist with collecting all the medical spend, collecting the forms, collecting the getting the doctor to sign off the form correctly, because that's what we've seen be as a common flag for SARS. They're not happy with who signed off the form. They're not happy with what's written in the form. They're not happy with where it's ticked off. It's a very complex form, and we get involved with explaining to the doctor exactly what's needed from them, what they need to sign off, what they're signing off, and where and how to sign. Um, from there, we would then we'll then give it to one of our expert accountants, and those accountants, what they do is they look at the full family uh, earnings, mom's earnings, dad's earnings, and from a holistic approach, they then do the claim depending on under which spouse would get the more favorable outcome. Oftentimes, we will reverse what happened in the mom's name and put it in the dad's name, and just cut and paste until we get the best outcome. And we've actually seen a specific client comes to mind where we managed to get for them an additional 200,000 Rand just by re-looking at who we're doing the claim under. And lastly, this is the best bit of magic in the whole webinar, is that we managed to work out how to do a backdated claim. So when we have a client that comes forward and would like our assistance, first question we ask him is, okay, how long have you been navigating these medical conditions? And if it's a medical condition which has been going on for longer than the last financial year, we then backdate those claims for all the relevant financial years. Most often we can't go more than 3 years, but sometimes it can even go 4 and 5 years. But most often it'll be a 3-year claim. So in our example, where we managed to push up the rebate by additional 30,000 Rand before even school fees, clients are walking away with 90,000 Rand within 8 weeks of engagement. And I say 8 weeks with no commitment. Obviously, it's not in our hands, it's up to SARS. And with SARS, we've seen sometimes claims can take 2 days, 2 weeks, 2 months. And I'm not going to say 2 years, because the longest we've seen is 11 months. And we have had claims which have gone on for that long. And, we deal with all the back and forward, all the correspondence until we get it over the line. If we have to meet with SARS personally, go in, talk to them, escalate, we'll push these claims over the line. That's what we're good at. That's what we're passionate about. And together with the whole team are keen and happy to assist. Whether you would like to just chat to us to get advice, we're there, we're happy to help. If you'd like our assistance in doing the claim, we would gladly take you on as a client. Our fee structure, if you do want us to assist you, is a 20-80% split. So you only once we have a successful claim, that's when we invoice our clients 80% of, sorry, 20% of what we manage to claim back for them. So if you manage to claim back 50,000, the client will keep 40 and we would invoice 10,000 Rand for our work. So yeah, that's it from us. I'm excited to look at the Q&A and we're not going to get through all the questions, but I'm going to try to get through many of the most relevant questions. And I do apologize if I didn't get to your question, or you're welcome to reach out to anyone on the team. There will be a WhatsApp which will go out either later tonight or tomorrow morning, just reaching out and asking if you like assistance. And yeah, the team is really very knowledgeable and excited to help. Okay, Ilan, are we ready for the Q&A?
Yes, let's talk.
Great. Okay. Here we go. Ilan, what counts as a specialized school? Does it need to be a registered specialized school? How exactly does what exactly would qualify for a specialized school?
Okay, so I don't believe it has to be a registered school for people with a disability or disabilities, but it has to cater um, for the disabilities. I'm just checking the actual legislation. So they talk about a special education school for learners with disabilities. So they probably cater specifically for those learners. They might have special streams within a like a normal stream school, or they have special assistants. And generally, the fees for those schools are in excess of the normal stream school. So, but I don't think schools will actually get registered as special schools, Dobby.
Excellent. Okay, Ilan, a question we've never had before, and that is if a child, due to their medical condition, is breaking things around the house, breaking down the door, breaking the glass table, uh, can those replacement fees go towards a medical expense?
Um,
I've never seen you
I
so
don't,
quiet, Ilan.
yeah, I've never heard of that one. It's a brilliant question. Generally, the law is that expense must be in consequence of a disability suffered by the taxpayer or any dependent of the taxpayer, and the expense will only qualify if it was necessarily incurred and paid by the taxpayer. If they could justify those expenses, we can certainly submit them as part of their claim, and it will then be up to SARS to determine whether they would accept them or not. I think that's probably the best answer I can give at this point.
Okay, thank you, Ilan. Ilan, another question, yeah? The question is, can one claim for sensory toys? And in the same question is, what about the stationery for the school?
Sure. The sensory toys, if, as I said, if it's a necessary expense because it was prescribed by the medical practitioner, or it helps the child, I guess, with their medical condition. So it was necessary incurred because of the medical condition, then I would put that claim through, certainly.
Great. Okay. Um, all right, let me check over here. Does it matter if one's using personal transport or public transport for the claims?
No, it doesn't matter. I think that if the transport to school will only work if the school is more than 10 kilometers from your residence. But yeah, if you're paying transport to a public transport or even private transport, makes a difference. That's a cost incurred, and you'd be able to claim that. Just have to justify it properly, and the team is set up to help you with that.
Okay, let's do one or two more questions, yeah? If Ilan, if someone's on a hospital plan or if they have expenses that they didn't submit to the medical aid, can those expenses still be recovered for rebate?
Sure. So any contributions to medical aid, even if it's just a hospital plan, then we can add any of your other out-of-pocket expenses um, that are that you've incurred. We can certainly add those to your claim, even if they're not necessarily for the disability. There are any general medical expenses that would qualify, like to see a doctor for any prescribed medication. It's not over-the-counter medication, like a Panado or something. Then you can claim those. You can claim those costs. Even if you go to a homeopath or a naturopath, you can claim those costs and those medicines, in fact, if they have been prescribed by that person.
Okay, excellent. Thank you, Ilan. There's so many good questions, yeah. But for this we did say we try to keep the webinars to about 30 minutes. So I'm just gonna take one more question and all the other good questions are excellent questions and you can really reach out to anyone on the team who will be able to answer. And if they don't have the answer, they'll bring it to myself or Ilan. Okay. Ilan, um, okay, let me just think us through. So if it's in one family. Okay, let's ask us two questions. In adults, what are common medical conditions on the mental health side that we see qualifying? That's question one, and then I'll get to question two.
Okay, so on mental, we generally see anxiety, depression, bipolar. Those are the three main ones that I think we see in anxiety. I mean, in on the mental side. Yeah, so it's the anxieties, the depressions, and bipolar. What's your next question?
Okay, and then the second part of that question is: do you need two RTRDDs or is one enough? How does it work if there's more than one person in the family with a medical condition? Should you go with the mom, the dad, child one, two, three? How does it all work?
Okay, that's very good. So generally, someone in our team will help you assess it, but these are the rules. Okay, number one is if we're going to be doing a backdata claim, then we need to go with the person in the family who has the longest history of a medical condition that qualifies. So if you choose, let's say, for example, your son who was just diagnosed with ADHD in 2024, then you will only be able to go back 1 year. Okay, so you'll be able to get 25 and then 26 and then going forward. But if you have, let's say, a daughter who was diagnosed in 2020 with a medical condition that qualifies, then we can go back to SARS and explain to them that it wasn't submitted and we can claim. So generally the requirement is to go back to the person with the longest condition. The next requirement is that if any of um, the persons with disabilities or medical conditions that are moderate to severe have, let's say, education costs that you want to claim, then we would need an RTRDD for that particular person. If that person only had the medical condition for a short time, then we would require two RTRDDs. Number one, to get the education expenses, and number two, to get the history. and backdated claims. So it can be quite complex, and sometimes we need to assess your family to determine if who's best to claim, who's best to claim as the person with the medical condition. Dobby, does that answer?
Yes, excellent. Okay, we'll do the second last question, then the second last question is what if a grandparent over the age of 65 is paying for grandchild's school fees or medical aid or even their older children's medical aids? How does this work for someone who's over the age of 65?
Um, okay, so I'm just double checking, but I think okay. So if they're paying for somebody who is their dependent, I think it's only for their direct dependent, like their child. I don't think paying for the grandchild will they'll be able to claim those medical expenses. So I think it's only to the level of 1 degree of consanguinity, as they call it. I'm open to correction, and I'm just going to check it. But I think it's only between parent and, I mean, like say, father and their parent, grandparents, I guess, and then father
Uh,
and child.
Ilan, I seem to recall something different, but I also stand to be corrected. I'll handle the next question while you check this up. Okay.
Okay.
So the next question is uh it's a two-part question. What is Stratfin's 20% fee? Is it on the entire return? And the answer is not at all. It's only on the additional medical rebate. So everyone gets a standard medical rebate, and it will be the 20% of the additional medical rebates we're able to recover. And then also together with that, a common question we get asked is, do you need to leave your current accountant or tax practitioner? And the answer is not at all. We specialize in the disability part of the tax return, especially when you're doing backdated. That's uh, our very unique offering. So what we first do is we do a backdated claim, and then we work together with whoever you are already comfortable with in the future years. We'll do the medical disability part of it, and your tax practitioner or accountant will do the rest. Okay, Ilan, do we have an answer on the for
Yeah,
parent
yeah,
over
yeah. Okay,
65?
so
A
a
grandparent?
dependent, yeah, a dependent is defined in Section 6B of the Income Tax Act, and that's a person's spouse, a person's child, and the child of his spouse, as well as any members of a person's family in respect of whom he or she is liable to their family care and support. Um, and any other person who's recognized as a dependent from the perspective of the medical aid. Okay, so if the grandparent is paying for the grandchild's medical aid, and um, it's on the grandparents as a dependent, or from the medical aid perspective, or if the grandchild is dependent on the grandparent, then they can claim the medical aid expenses. So the short answer is the grandparent can claim the grandchild's medical expenses. Whether that will work for the disability is a question that I think I saw won't work. So the disability only works between parent and child or child and parent. Sorry, between parent and child, but not going backwards and not skipping a generation. So to clarify, um, if a grandparent is paying for a child's benefits, a grandchild's benefit, then they can claim that medical aid expense in their own tax return. If the grandparents, let's say, is under the age of 65 and he's not getting the special dispensation, and the grandchild has a medical condition, then the grandparent can't claim the grandchild's medical condition. Hope that makes
Got it.
sense. But
Ilan, if it
we'll
didn't
clarify
make
if
sense,
anyone
someone
has
on the
that
team will.
actual question. We'll check it.
Yeah. And then I just want to thank you, Huda, for putting this webinar together. And he did ask
Yeah,
me to
well done.
answer one more question. The question that he pointed out, someone asked is, do you have to be unfit for work to qualify for these additional medical rebates? Does it have to be that level of a medical condition?
No, I don't believe you have to be unfit for work. It has to be defined as moderate to severe. There are certain requirements. For example, if you're in a wheelchair, you can work, but you're in a wheelchair, or if you have anxiety and you have a panic attack, once or twice a year or even more, you can still work and or if you're bipolar, you can still work. People work around disabilities. Plenty of people who have disabilities or medical conditions work, go to school. They might not lead entirely normal lives because of the medical condition or disability, but they work around them. If you're blind in one eye or you have
Hearing loss.
very low hearing, yeah, hearing loss, or you have a stutter, you can still work and earn a living, which you have to, and you can still claim the medical condition.
Amazing. Thank you. Okay. Thank you, everyone, for joining. Thank you for giving me the opportunity to share my knowledge and have a lovely evening.
Thank you, everyone. Good night.